My name is Chuck Weiner. I'm a CPA. My background is born in Galveston, 1970 graduate of Bel Air High, 1974 graduate of UT Austin. I went to work for one of those big accounting firms and later decided to part ways. And I went to work for now non-existing sporting goods company. When I started with them, they were 15 stores. When I left 4.5 years later, they were over 100 stores. And I knew at that time they weren't going to make it because the people who got you to this point are not the people who get you to this point, and they just didn't understand it. And they got bought out, and that company just didn't make it. So it seems like every company I've worked for, except for the Exxon gas station when I worked at when I was a teenager, is no longer in existence. I left Austin, went to work for a startup CPA firm, and a few years later, it was time for me to move on because they were again growing beyond their means, their control, and eventually merged with a large firm. And I'm like, I was happy not to be part of that. So in October of '84, I met George Kell. We started up a firm. Today we have 2 offices. Mine's on Hillcroft Southwest Freeway on a street called Savoy. He's on I-10 near Echo Lane. And between the 2 offices, we do about 900 personal returns and about 300 or 400 business returns. And I do financial statement preparation, and he is one of the city's experts on estates and trusts. And so that's, tax season is about to start up. We got some weird things going on, and I'll talk about that in a second. We have some deadlines coming up, and for you business owners or business managers, the W-2s and W-3s are due to Social Security at the end of this month. That's a change from last year. They said, oh, we want to get it all done in January. No way, didn't work. They tried it for a couple years, didn't work. The infamous 1099s that they split between 1099s for rents and royalties and contract labor. Contract labor is now in what is called a 1099 NEC. Those 1099s with the cover page 1096 are also due at the end of February. March 15th is the deadline for filing partnerships or S corporations. April 15th, which is Good Friday, evidently our county doesn't care, you have to file your property tax renditions, or it can be extended for 30 days. If you get a window envelope, folded window envelope with this cover on it, this is your property tax rendition. If you don't file this timely, either on April 15th or extended on May 15th, and you go to pay your property taxes, business property taxes, there's a 10% automatic 10% penalty, and it's tough to get out. You have to write them a letter and blame it on somebody else. Generally, I have the clients blame it on me, so it works out okay. 3 days later, April 18th, the individual returns to your famous 1040s, 1041s, estates and trusts, and corporations, C corporations are due. Also, at the same time, your first estimated tax payments are due, whether you have a C corp, a trust, or your individual.
What date is that?
That day is April 18th. So we have 3 extra days this year.
What about the S corps?
S corps are due on March 15th, along with partnerships.
The first payment?
And those are pass through, so there's no tax due. So the owners have the owners of those partnerships and S corps have their first estimated tax payments due on April 15th. And then on May 16th, Texas franchise tax are due. And talking about franchise taxes, you pay no tax due threshold this year is $1,230,000. So you just squeak under it. You don't have to pay a franchise tax this year. The tax rate for retail and wholesale is 0.375%, and for everybody else, it's 0.75%. And the compensation limit is 400,000 per person. Let's move on. How many in this room got a PPP loan? Okay, all right. So PPP loans, if your PPP loan was forgiven, it's got to be on your return, no matter what form you file.
That was 2020.
But was it forgiven in 2020?
Yeah.
You still have to put a disclosure on it, on the return. I don't know.
Tax on it.
There's no tax on it. And if you file it as a CS or S corporation or partnership, you have to run that through your retained earnings. Every tax system has it a little different, but you've got to put there's a little blurb. The tax software I use is an Intuit product, just like TurboTax, except you buy TurboTax for $80, I pay $17,000 a month. So, but it's what I make my money. For borrower, now let's talk about the process of getting your loan forgiven. For borrowers whose lender is participating in direct forgiveness, you go directly to the SBA portal, fill out the documents, upload the documents, and you're done. If your lender is not participating, then you must go through your lender. We've had an easy time with Amity, with Chase, with Allegiance. We've had a very difficult time with Wells Fargo, but especially Bank of America, and there was one other major bank that had a problem. Oh, Frost also was pretty easy. Yeah.
For Allegiance, you said it's difficult or?
It was easy to get.
So what do I just contact them, say, give me that work?
It's very easy.
I don't take care of it.
If your loan is under 150,000, you use the 3508S, and it's basically saying, yes, I used up all the money yes, I used it from this time to this time. Yes, sign, and you're done.
That's the PPP.
That's the PPP loan. Okay. If you got an EIDL loan, let me explain what that was lovely. That's
I love my PPP loan.
huh?
I love my PPP loan.
Well, it can't be. They extended the deadline to July. Normally April. I'm like, I need the money. Where's my money? Well,
It was the best virus ever.
it was very helpful to me at a great time. The EIDL loan is where you've got $1,000 up to 10 employees, up to $10,000. So the question, kick that back and forth. Is that forgiven? How do we apply for it? Is it not going to be forgiven? It's going to be taxable and not taxable. And then the SBA came and said, forget it. They're all don't even apply for it. It's automatically forgiven. You're done. Period. So, and again, that you have to report that forgiveness, just like you reported the PPP loan forgiveness. Okay, stimulus payments and credits. This was the biggest pain in the ass last year. Did you get the $1,200? Did you get the $600? Did you get a $500? And half the letters we got from the IRS last year dealing with 2020 tax returns had to do with the credits. Somebody said, well, I didn't get all my refund. Well, you told me you didn't get any stimulus payments. Well, I checked that I did. You didn't call me. And just between us in this room, I have to have 120 hours of continuing education every 3 years, so rolling about 40 hours. And so this year I took 3 days in a row, 2 live and 1 by Zoom. The Tuesday lunch seminar, but via videotape, was the current commissioner of the IRS. He's been on the job 3 years. It's a 4-year gig. In 4 years, everybody's had enough. And so he admitted that in July of last year, July of 2021, there were 23 million unopened pieces of correspondence at the IRS. Let me repeat that number, 23 million. So a few weeks ago, we got a response to a letter we wrote in June saying that they need another 90 days. All right, make matters worse, we have a lot of unhappy clients because they haven't got their 19 or their 20 refunds. At this time, again, this was the second week of January. The commissioner of the IRS told us there were 16 million unprocessed 2020 returns. And here we are about to start, and I e-filed my first tax return yesterday. We've done 5 or 6. We've had like 6 easy returns in the office, and the forms and programs were only allowed us to print 3. No business returns and just very simple personal returns at this point. All right, so the third stimulus payment went out March, April, May, June. They said that they're now all out. You're supposed to get a letter from the IRS. I got mine in Spanish and in English. Bring those letters with you. Now, also starting this past July, you started receiving a series of prepayments on some child credits. So let me explain. The American Rescue Plan expanded the child credit for 2021 to get, they say, to help more families. So the child credit increased from 2,000 to 3,600 for kids under 6. From kids to 16, it increased from 2,000 to 3,000. And prior to that, the credit ended at 16, but that they've extended it to 17-year-olds. So 17-year-olds also get $3,000. So if you have a 5-year-old, a 10-year-old, and a 15-year-old, you've got payments for July through December, representing half the year's credits. The IRS sent you a letter. Chances are that letter is wrong. So we're asking people to say, give us the letters and give us what you deposited, and we'll try to figure out which is right. Chances are it's not right, and you'll get a letter. Nobody likes getting a letter from my IRS, especially saying, and I got one freaked out saying, what is this? I says, that's the interest that you were paid on your refund because your refund came late. And what is this letter? This letter is just acknowledging that you got your $1,400. Well, I don't like getting letters from the IRS. Don't either. But that's what's happened. We had several of those phone calls this week. All right, moving on. Charitable contributions. The 2018 tax law under the past administration eliminated personal exemptions and doubled the standard deduction. By doubling the standard deduction, it eliminated 75% of the people who itemize. But people say, oh, but we give all this money to charity, can't we at least deduct that? And so for 2020, you were able to deduct up to $300. For 2021, if you file single head of household or married filing separate, you can still deduct $300. If you're filing married joint, like several of us in this room, you get to deduct up to $600. That must be by cash, check, or credit card, and it can't be to like Goodwill or donating some piece of art to a museum doesn't qualify. So it's got to be checks, cash, or credit cards.
Quick question on that. So I filed, like George that works for me. I just did his through TurboTax, and then my son Trent, who's 17, I did his through TurboTax. Super simple.
Now you make sure that Trent did not claim himself as a dependent. I mean, he didn't claim himself. He's being treated as your dependent.
Yes. I just followed, I don't know, I just went the rules, went all the way down TurboTax.
Because you may have just cost yourself $3 grand. If you didn't file it right, and he claims, where he files independent of you, you just cost yourself $3 grand. So you gotta check that. You gotta check that, and the worst part about that is you can't go correct that until the due date of the return, which is April 15th. So you'll have to, if you, how much, if he,
I don't understand, well, because I haven't done my taxes yet, haven't been
do
done.
me a favor, send me a copy of his return, I'll take a look at it, I'll tell you real quick what my thoughts are.
Okay, because I just did it through his W-2 that Trent has.
Yeah, but did you say he's a dependent claim by somebody else?
I don't know. I was feeling really good about myself.
Well, look, we live in an age of specialists. I can no more go to a chemical store and pick something out and go spray it around my house, inside of my house, because that end up killing me or the dog, and that would really kill
You're
me.
about to kill me.
But so we live in an age of specialists. None of us do.
Okay, so my question was, and I'm gonna interrupt, my question on the charitable contributions,
Yeah,
on the TurboTax, it said churches, Goodwill, a couple of things.
that it does. It does. If you itemize, you can deduct all that. If you don't itemize, this 300 or 600 is an extra deduction. But in order to get that extra $300 or $600 deduction, it must be by check, cash, or credit card, and it must be to a qualified organization.
So what if they give, I don't know, $10 to the church every Sunday? And it's cash, there's no, you're not.
There's a record of it. I mean, if you keep a log saying I went to church and the sermon was this,
Are they gonna come, they're gonna come back and literally ask that?
they have been known to, but let me tell you, if the IRS doesn't have the people open up 23 million
Yeah,
letters
yeah.
and respond to them, and Congress is split, the Republican Congress, you're not going to get, the IRS is not only not going to get more money, they get their budget cut. So
if we put down there, so George put down there that he put down, say, every Sunday he gave $20 to the church.
So there's
and he put it on there.
it's up to him. You're not a paid return preparer. He's responsible for that. But the thing is that this is Texas. There's a church in every corner.
Yeah.
There's a church, mosque, synagogue, prayer house.
Praise the Lord.
Yeah, but I mean, there's no proof that he didn't do it. And
But
they're not
everybody
gonna
has-
come knocking on my door.
Some churches, some religious organizations keep track of this stuff. Some don't. That's why.
How do you keep track of it if you pass a plate around and everyone throws in $1 or $10? How do you keep track of
Figure
it?
how much you spent and you put it down.
Well, now that's what we did.
You keep a log. It's like your mileage, like your auto log that you keep in your car. Every time you go move that truck for business, you write down where you're going and how many miles. It's same thing, keep a log. Keep a log. Because the other thing that people don't think about when they're doing charity is how many miles you drive for Boy Scouts or coaching or Little League. How much was your uniform? How much were your dues? How much were your expenses to take the kids, to be a camp leader someplace? Those are the kind of things that add in.
Okay, I'm sending you his return right now.
Huh?
My daughter just found out that you cannot donate services, there's no deduction.
Absolutely. Remember,
For what?
If you donate your services,
yeah.
it's not tax deductible.
So to give an example of that, for those old enough in my age, remember Bob Hope used to do USO tours.
Yes.
He donated that time. He got no benefit. He got no tax benefit.
Always been like that?
It's always been like that, because remember, the 99.9% of us are calendar year cash basis taxpayers. So when we get the cash, that's income. When we write it to a deductible item, that's an expense. The net is what your income is. That's what you pay tax on. So yes, you cannot donate services, or if I give somebody a bill for $500 for tax return, they never pay me, I can't write that off. That's just.
Come on, once in a while you do, don't you? Just kidding.
Yeah, all right. I want to remind everybody this, I spoke about this last year, but I want to remind everybody this year, we're still in 22. Meals and entertainment. So my typical deal is take a great client to the ballpark. Walk up to the ticket window and pay for the game tickets. That's entertainment, not deductible. You take it
Really,
to,
why not?
No more.
because it's entertainment, not deductible.
The lunches or food is.
The food is, so that you take that person to one of the food stands and buy, peanut butter, hamburgers, and drinks, that's deductible on the ticket, right? Who the person is, so, and so forth. That meal, because it's presented by a restaurant, even that little booth in the kiosk, it's not a kiosk, but even that little station it's a real restaurant presenting food that you're going to eat on the premises. That's deductible. So it has to be by a restaurant. It can't be like a sandwich picked up at Randall's. You can go buy prepared food. Yeah,
If you go to Warehouse 72 to Network,
absolutely, because
that is your own lunch deductible.
your own lunch is deductible if you're in a business setting. Normally, it's you taking, let's say you took me to Pappas for lunch for signing the lease, and you picked up the tab. As long as you were there, as long as we talked about a little bit of business, and it's deductible. You want to write on the receipt who it is, new lease, and you want that written in your appointment book. Now, appointment books are all kinds of things these days. Most of them are online or on your phone. That's fine. You want to have your appointment book and your meals receipts, because anytime they come audit a business, it's like the top thing. The top thing they're auditing these days is meals and entertainment, transportation, advertising, because people put a lot of stuff in advertising. So make sure your advertising expenses, true advertising.
But as far as meals and entertainment, you said there is no entertainment deduction.
That's correct.
So that's,
And so even if you spend it, you have to report it. It's part of your business expense reporting, but you get no credit for it. If you have a partnership, C Corp or S Corp, you have to account for you have your business loss, then all these adds and pluses and minuses to get to your taxable in profit or loss. And so the notice that talked about this specifically calls out grocery stores, specialty food stores like Specs. Specs is not a bar. You can't consume that alcohol on premise.
I've seen people do
I see people,
Outside the door.
I mean, look,
it. They're about paper bag.
or like a 7-Eleven. I mean, God, going back to, I mean, 7-Eleven.
There are still some.
There are some.
And they're coming up.
In the convenience stores, that's not really a restaurant. So they're special. So does that mean that even Jack in the Box is considered a restaurant? So if you pick up Jack in the Box and bring it back to the office and you pass it out, that counts.
And
Yeah.
it's a full deduction, right?
It's 100% for last year and this year. So on your 21 returns, your meals are 100% deductible if they come from a restaurant.
And there's really no limit to what you can do, right?
That is correct, as long as it's not lavish or extravagant under the circumstances. In other words, you have a client that does $500 of your business with you, and you just spend $1,500 on a meal. Does that make business sense? No.
Maybe.
You're the business owner. You have to be able to justify deducting. Okay. Student loan forgiveness. This has been a hot topic and so forth. And normally, if you have a loan forgiven, it's deductible by the lender, and income to you. There used to be only a few exceptions, especially if you're in bankruptcy or you're insolvent. But for last year through 2025, student loan forgiveness is excluded for income, as long as not in exchange for services. Some schools, some colleges and schools say, we'll loan you money, but you're going to work it out. And so that's, so they'll give you a W-2 and reduce your loan. So and say it's a reduction of your tuition. Others say you work for free and we'll pay off the loan. So the question is, what would you rather do? Write the check for the amount of the student loan or the tax on the student loan amount? Me, I'd always rather pay the tax on the student loans. Unemployment compensation. This was another issue last year. We have a lot of clients who were out of work. They needed their tax return done. So we did a lot of tax returns in February. And then Congress came along and said, we'll give the first $10,200 of unemployment compensation tax-free to you if you make less than $150,000. And the IRS said, oh, we'll fix that. Don't worry about any returns, we'll fix it. And so we wrote out a last letter about that just 2 weeks ago. So the IRS has not finished fixing all those. That's again, 23 million unopened correspondence, 16 million unprocessed returns. There was also some assistance to homeowners so that they could make payments on their less. You need to go see something. I messed up my back during tax season one year by picking up a bucket of water on my dad's boat, and it's like twisted. It's just the worst. It's brutal. So I'm careful with my back. Okay, so that if you or someone you know received homeowner assistance fund payments, those are excluded from income because they're treated as qualified disaster relief payments. I spoke about EIDL loans, and I got this call yesterday. Emergency rental assistance, saying my land, I got some money, because I wasn't working, and it helped me pay my rent. Is that taxable? And I said, let me look. So here's what it said. Payments received directly by landlords and utility providers are taxable to them and included in their gross income. Such payments are not taxable to the tenants, regardless of whether the payments are directly paid to the tenant and then paid over to the landlord and utility providers, or paid directly to the utility providers and the landlords. That's why there was a lot of this, and a lot of people didn't even know about either one of these two programs, but they were available, and they kept a lot of people in their homes. We had 40% of my business deals with real estate and so on. We had a lot of happy landlords because they were able to get some cash flow and make their house payment, make their bank payments. Now there's a new one. This is all the crap that's happened this past year. This is the one that has set us all off. I want to talk about the majority of new businesses today are S corps. I'm an S corp. You're an S corp. Les is an S corp. S corps. You're an S corp. So one of the issues with S corps is 20 and 21 have probably been lost years for you. And the IRS is saying, well, prove, do you have skin in the game? Do you actually have money on the table that's your own money at risk to deduct against these losses? And we have one particular client, where it was two guys, one guy owns the majority, one guy owns the minority of it. And I do the return for the majority owner and for the corporation, and I report losses to the owner, to the majority owner, because he's put all the money up. And rumor has it that the other guy has been deducting those losses, even though he has nothing, what is called at risk. And so the IRS is tired of this crap. And so last year they sent out a draftable form 7203. And so in the back of my mind, I remembered this. And so when I was preparing for this, it said, this issue came up. Well, George and I pay about $17,000 a year for the tax program for each of these offices. We've been using the same software since 1994. And this form is not ready yet. So we have more S corps than we have C corps. We have more S corps than we have partnerships. And I picked up Jay Mayer's, he has an S corp. So right now, and you're not supposed to file your S corp return without this 7203 stating how much money you've got invested and how you did it and so forth. It's a 2-page form. And most of it's going to be populated from the other parts of the program, but the form's not ready yet. I've got great instructions, but the form has not been released. And so, as I said, the deadline for filing S corps is March 15th, and this is not ready. So my tax program people say, well, the form should be ready today. Well, I'll find out in a couple hours whether it is.
Is it the IRS that's not ready or your tax people?
I don't know. And so I went into the community of other preparers, and they're all saying, I've never seen such length. Everybody's pissed at Lacert, and they're saying, this is no way to run our organization. We got to file these returns because got a lot of them to do. Got a lot of them to do, and we're just a little over a month away from filing dates. So I used to bring in the 84 tax book was about this thick, and this year's book is about yay thick. And in 1986, I get a call from Joni. She's got a little kid at home. She says, tax reform is coming. And I said, Joni, what are you going to do? What are you going to do? I mean, tax reform. I said, Joni, it's 895 pages long. I says, oh, never mind. And 2 cartoons came out. One of them says, 2 volumes, small volume, thick volume, says which volume is the new tax act. Next picture was tax attorney, CPA, 2 guys standing next to the other. If it's true tax reform, while these guys still smile. So every time Congress passes a tax act, passes a fiscal spending bill, they always throw something in there. Something in this past year, they haven't really done a whole lot, but tweak things like what we're talking about. And I say every time they do that, that's full employment for Chuck.
Yeah.
And Joni doesn't have to worry about that anymore. Yeah,
I have a
Ted.
question. What is the advantage of S corp or an LLC or an LLC?
Okay, all right. So this is a common question. LLC was created in Nevada. It simply stands for limited liability company. What it does, it puts the corporate protection around a business entity. So in other words, if something happens, let's say I mess up somebody's return and it costs them hundreds of thousands of dollars, and they come sue me. All they can do is take the assets of my corporation. They can't come take my house, which is an exempt asset always. They can't come take my car. They can't come take my savings and so forth. And so what it does is it puts those corporate protections. A single member LLC is automatically a sole proprietorship. A 2 or more member LLC is automatically a partnership. And if you want to be an S corp, you have to file the 2553. You want to be a C corp, there's another form for that. And when you file those forms, you set your calendar, your fiscal years. With the C Corp, you could be from a January year into a December year end. 99.99999% of the time on an S Corp, you're a calendar year. 99.999% of partnership, you're a calendar year. The advantage is that, give you an example right now, we have a client who has a C Corp. He's had it for a long time, and he sold all the assets, including goodwill. Goodwill in an S Corp passes out to the shareholder at capital gains rates. Goodwill is ordinary income, which then the the corporation has to pay income tax on, and then send out a dividend to the shareholder, who then pays dividend tax on. So it's double taxation. The advantage is most corporations, if you're bought out by a very large corporation, they're going to buy your corporate stock and take it over, and all the attributes of it. If you're a small corporation, you're doing only $2 or $3 million, you're going to do an asset sale. 90% of the time, the buyer wants the assets, not the corporation, all the crap that goes with it. All that. Because if there's a problem from 3 years ago with the IRS over payroll taxes, that's 20 grand, that's your problem, not the new buyers. And so we're going through that. So give an example. We have a client who's selling her optometry practice for $1 million. 90% of that is goodwill. 90%, 900,000 is goodwill. For her, that's a $900,000 capital gain. If that was in a corporation, they would first pay 21% tax on that. And whether she could get a break on pulling the money out, because that may be a liquidating dividend and so forth. But the difference is it's a two-step tax. Even though you fill out the same Schedule D capital gains, so forth, there are no special capital gain rates in a corporation. Plus, I know it's not going to go through, it'll never pass, but they're talking about raising the rate on the C corporations back to like 28% instead of from the 21%. It's not enough. They say.
So which one is preferred, an LLC or?
All right.
That's cool.
All right. An LLC is simply the limited liability protection put around business. I believe it depends on what you're going to do. If your LLC is generating less than $50,000 for profits, why go create an S corporation where you have to go do payroll every year, every quarter, and do all those extra forms and so forth, versus just keeping it as a Schedule C. We have a lot of clients who have crossed that path, and we say partnership or S corp or C corp, and no two situations are alike. In S corps, the medical insurance and medical expenses for, let's say you have one shareholder, you're the only guy, and you have a big medical expense. Your medical insurance is high, and you have some cost of some expensive drugs and so forth. In a C corp, those health insurance premiums are deductible by the corporation. You can create a health insurance medical reimbursement plan and deduct those medical expenses under that medical reimbursement plan, where you can't do that in an S corp. Okay. And also, let's say you have long-term care insurance, or you have disability insurance. Those things can be deducted by the corporation, where they're not deductible by the S corp. In the S corp, there is a way to deduct those insurance premiums on your personal return, but not disability insurance and not medical reimbursement. So it depends. And the other thing is, to have employees and payroll and all that, it's a pain, because you've got to deduct everything, pay the payroll taxes on time, file the quarterly reports on time, the annual reports on time. We have a client who just paid a $562 penalty because her husband didn't file the 2 W-2s with Social Security in time. Waited a couple of years. The IRS got pissed, hit him with a penalty on it.
In our business, when we formed, we put in the form that said now 20 years ago. I looked at it, I said, yeah, we gotta be an LLC, because the only 2 people in business are me and I. Everyone else is an independent contractor.
Yeah, but see, the thing is, let's say somebody's not happy with the work you do. And you said your roof needs to get replaced, says, well, and if it's not, it's gonna leak and ruin those beautiful floors that put in. Well, sure enough, 2 years later, the roof leaked, the floors are ruined, they're gonna come sue you because you didn't fix the roof. And you say, here's this piece of paper where I told you in writing that your roof needs to get replaced within so many months. It's now beyond that, and your floors are ruined, not my fault. And so you go sue all that, and you go to court and you lose. They can come after all your personal assets if you're not protected by that LLC. And a lot of people say, well, I've got this LLC, I don't have to file it. Well, depends what else you file. Because
We just had it happen recently. We had a customer that wanted some work done. And someone did the work before us. And they left the whole front of the house hanging. In other words, all they had is on a jack post, 1 2x4, holding the whole front of the house. We went in and wanted us to come and look. John said,
Not gonna touch it.
we're not touching it, man. You get the guys that came in. Said, you know, I'd be afraid to be in his house. Guess what happened?
front of the house.
A week later, the front of the house fell in.
That sucks.
Like $300,000 worth of damage. I'm glad we didn't get involved.
That's why, before you start a business, you need to have a conversation with a lawyer and a CPA or somebody who really knows taxes very well. The other groups are called EAs, enrolled agents. Chris Storrs from McBride, who's our bookkeeper here, is an enrolled agent. And so she can do a lot of that. And so there are a lot of great, wonderful, thousands of great return professionals in this. So before you open a business, expand your business, try to sell your good part of your business. It's the Fram Royal Filter commercial. Pay me a little now or a whole lot later. So we live in an age of special. I said that earlier today. I certainly can't do what Ted does. Ted what he does is magical. He really does. But I can't do what he does, and he doesn't want to do what I do. So surround yourself with experts and talk to your experts on a regular basis. So it's a little now versus a whole lot later. Okay, any questions?
So, last year when my mom passed, and so the year before, she has a very basic return. Again, I did it on TurboTax for her.
Right,
All she has income was teacher retirement.
right.
This year, how easy or hard is it I guess I have to do her 2021 return?
Yes, right. And what you do is TurboTax is an Intuit product. And there's a spot where you enter all the taxpayers' information. There's a line there for date of death. And what it will do, in past years, it'll say deceased on such date. So it notifies the IRS that somebody's passing. And I always recommend, regardless of whether when someone passes, that you file a final return with the IRS to let them know this person's deceased, go away. We had a client who
I do it under her name and her stuff.
yeah, she files.
Yeah.
A return is filed for her under her own name, absolutely positive.
Okay. And then I have to enter all that teacher retirement income that she got.
Just like filing another return, that the key is you may have to add to the return a copy of her death certificate and a copy of your, what are called letters testamentary, saying where you're appointed by the court as the executor. And there's also another form called 1310. If a refund is coming back to her, you have to file this 1310. And you may actually have to paper file the return. Sometimes, depending on what happens, the IRS, some years will take them electronically with all that information as long as it's attached to the return.
Okay.
And she passed in 21?
Yes.
Okay, so, yeah,
November.
and she passed in November?
Mhm.
Sorry to hear that. Yeah, so all that the final return and such. And I presume Texas teacher retirement has been notified of her passing.
Yeah, and I don't remember if I've got a year-end statement for them or not. I need to call them and find out. I need to look, see if I have something.
Because normally, if you paper file that form, because it's got withholding on it, has to be attached to the return. If you have to paper file, and so remember form 1310.
And then so now I guess I was a beneficiary on our teacher retirement, and I'm supposed to be getting like 10 grand or something this
Yeah,
summer.
and
That's got to be filed. That's got to be claimed.
yeah, there goes, and so in January of next year, you'll get a 1099-R from the Texas teacher retirement system. And it'll show that survivors benefit.
Okay,
They're very good at saying that.
sure they are.
All right, thank you, Chuck.
Anything else?